And welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy. Using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to defer capital gains tax on the sale of highly appreciated cryptocurrency, businesses, real estate, sometimes cannabis businesses as well. When you go to sell, to be able to defer tax and to create and preserve more wealth. We're also streaming on expertcresecrets.com, so you can check us out there as well. All things commercial real estate brokerage, business brokerage, and M&A advisors. I'm your host, Brett Swarts. Each episode, I'm joined by some of the best real estate, financial, wealth, sometimes CPA minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. He's out of the great city of Bend, Oregon, and he has a broad experience in providing executive leadership and business counsel to companies across industries, including retail, manufacturing, energy, medical, biotech. And he founded Dope CFO and has built a national cannabis accounting, bookkeeping, and tax training program to help students in all 50 states unlock a new world of clients, empowering them to start their own practice and create a stream of wealth for themselves in the newly developed cannabis, CBD, hemp industry. He was runner-up for Portland Business Journal CFO of the Year in 2017, making him the first cannabis CFO to be ever nominated. He also served in Big Four, including PricewaterhouseCoopers, as well as the winner of the 1995 Gold Medal Award for the highest score on the CPA exam. This gentleman is really smart, and he's here. He's a CPA. Please welcome Andrew Hunzicker. Andrew, how you doing?
Great. Thank you for the very nice intro.
Absolutely. Excited to have you on the show. For our listeners, get to know you for the first time, would you give us a little bit more about your story and your current focus?
Yeah, just real quickly, I was in the 90s. I was in Big Four and Pricewaterhouse. At the turn of the century, I'm from Oklahoma. Like many, I became CFO of one of my clients in the oil and gas space, was there for 10 years in Oklahoma City until 2010. A company I co-founded with my boss, we sold to Chesapeake Energy for almost $100 million. And when that happened, I moved to where we vacationed, which was Bend, Oregon. So that happened in 2010, I think, and then been here ever since. Fell accidentally into the cannabis space. We were one of the first states to legalize. And so with that, I just really, the best way to explain it, accidentally fell into the space. Was just doing part-time CFO work for clients. And actually accountants and CPAs from around the U.S. started reaching out to me and finding me, especially after that CFO award, and wanting help. How do I do controls? Where do I get a chart of accounts? Where do I get PBC documents? I need help on this industry. How do I get it? Can I buy your work papers? And so that's how the Dope CFO program started. Never would have thought to start this in a million years on my own, but people, they kind of beat a path to my doorstep and said, we want what you have and we'll buy it. I'm like, okay, that's interesting. So we'll go from there.
Love it. That's a really cool background. I can't wait to dive into all things cannabis, capital gains tax deferral, and other tax challenges that the cannabis industry is facing and want clarity on. But before we go there, I want to take one other step back. I want to go back perhaps to the university days, or maybe when you were taking that first CPA exam and getting the highest score. You know, I believe we've all been given certain gifts in this life, and these gifts have been given to us to be a blessing and help to others. Some people call them superpowers. Some people call them strengths. I believe they're God-given gifts, and again, they've been given to us to be a blessing, help to others. So what are those one or two gifts, Andrew, that you believe you were given, and how does that help how you help and bless people today?
Well, I think I'm persistent, and actually, if we want to dive a little quicker into my background, I like to tell people I got thrown out of school 4 times, starting in 2nd grade, and I think the last time was 10th grade. In high school, I never ever got above B's in anything. I was, I think, 40th out of 80 people in my high school. I got B's in college, and I didn't get straight A's in accounting until I went back to night school when I was 29, working for $5 an hour in a warehouse. And so I guess my inspiration is anybody can change. So I never scored the highest grade on any test in my whole entire life, you know, when there was only 10 other people competing against me. But by the time I went back, I realized, oh, maybe I can put my head down. work towards a goal, work hard for a couple of years, do my best. I really just wanted to do well and pass the test, and was absolutely shocked when I did really well. And so I like to tell people, yeah, it's never too late. And I also, started my career, really my accounting career, much later than many people. And actually, that was why my teacher said, Andrew, you're 29. If you don't score really high on this test, you will never get into the Big Four. You are not in their target at my age. And so she was right. And I got a great score on the test. I got into Big Four, and it launched a good career. So hopefully that will inspire others. It's never too late to get started.
It does, Andrew. That's amazing, right? Because it's not your traditional path, and sometimes yeah, we mature at different ages in different parts, right? And that persistence, right? And then finding something that you loved and wanted to be and had an end goal in mind of, hey, if I can achieve a higher score, then I can get into the Big Four, which can launch the next 50 years of my career. Is that a fair summary?
Yes, perfect.
Excellent. So now let's dive right into our topic, cannabis capital gains tax deferral. But even before we go there, more so just the cannabis industry and kind of demystifying the tax behind it. So, Andrew, what's the biggest secret or biggest thing to overcome when it comes to understanding the cannabis industry and the accounting and the tax and the systems behind it?
Yeah, so it's a very tricky industry. I was in oil and gas for 10 years, and it's also a very tricky industry, but almost the opposite, where you have the Big Four. It's been around for decades. You've got software, we've got gap guidance, we've got industry guides, we've got all these tools. And so it kind of goes from the top down. Cannabis went the other way, and up to even a couple of years ago, you could not find a CPA that would touch it. They're like, no way I'm getting anywhere near that. It's crazy. It's illegal. It's federally illegal, which is still true today. It's still on Schedule 1. That said, in just a few short years, we've gone from where no one would touch it. Pretty much all the big national firms are in the space at this point, except for the Big Four. All the small firms are in it, the medium size. And so, but still today, yeah, we don't have all that gap guidance or industry guides, et cetera. And so we kind of had to learn it from the bottom, and layered over the top of that, many of the companies in the early states like mine, Colorado, Oregon, California, were getting bad advice from attorneys around how to beat the tax code. And your podcast is about tax strategies. And so, of course, you can have a legal, good, correct tax strategy, and you can also have a tax strategy that just flat out won't work. And so these kind of strategies were pitched by a lot of attorneys, et cetera. And so a lot of the early people, like Harborside's a good case to go read. They spent 10 years in court and still lost $11 million, and no telling how much in court fees, because the IRS is winning most of the positions. The tax code in particular that affects marijuana is 280E. It's a very easy tax code to learn because it's only one sentence. If you Google IRC 280E, it's only one sentence long, and it's very simple. It says if your company traffics, whatever that means, in Schedule 1 drugs, which used to be cannabis and CBD and hemp, now it's only cannabis, CBD and hemp are off Schedule 1. But for cannabis, it says no deductions and no credits, period. So if you traffic in a Schedule 1 drug, the tax code doesn't matter to you because you don't get any deductions or credits anyway. Now, that said, 471 comes into play, which is not a deduction or a credit. It's inventory. And so whether you sell heroin or cannabis or whatever and file a tax return, you can book cost into inventory, which go to cost of goods sold, and lower your taxable income. And so first and foremost, we want to do 471, especially -11 for our farms and processing and product manufacturers, so that we can get a lot of cost into inventory correctly, and so that they will avoid some of that tax issue.
Okay, let me try to unpack that a little bit, right? And I love the way you've used the analogy of oil and gas industry, right? Where it's been around for a very long time. You have industry experts and guidelines, and it's kind of set. And of course, it's for the professionals to interpret each particular, business model and set up of businesses and entities and different things like that to apply the law. But cannabis is like the reverse order. It's like it's starting and it's moving its way up. Even the Big Four still don't have, let's say, aren't really working on it. It's more like the mid-sized small firms, and so it's kind of this is still new, but it's important to understand that you still have to follow the guidelines, right? The IRS has codes and has guidelines, and if you're not doing it properly, they're you're going to owe the tax, right? I think a CPA tax attorney that I work with, he basically says it's interesting with the IRS and the law and the way it's written that essentially it's the one thing, especially when it comes to tax, that you're guilty until proven innocent, right?
Yeah.
So they show up, Andrew, maybe talk on this, and they say, hey, you owe us the tax. Prove that you don't, right? Prove that you had an expense for this, or prove that it actually, you said 2AE and 471-11. Prove that it wasn't, that it was a legitimate, thing that you were doing here, right? And if not, we owe the tax plus penalties plus interest, right? So explain that concept too to folks who may not understand that.
Yeah, and so the IRS is pretty much, I think in most industries, the IRS goes after people and they win some and they lose some. They're winning every single case. And even small mom and pop farmers, they'll get $500,000 or more. It's a very, very punitive tax. So even if you think about it this way, you're a dispensary, which we see everywhere, it's like most retail, that Keystone markup, you buy your product, you sell it for double. So that's your gross profit. Well, basically you're paying tax on gross profit. And so running a retailer is very hard in any industry, but imagine paying tax to the IRS on gross profit. And on top of that, you're paying other taxes to the state and city. And so it's very, very difficult. And so really, even if they do this correctly, they can actually on the farming side make a little bit more because they can get a lot of costs into inventory. But for much of the industry, if they do this correctly, they're more likely than not going to have a net loss and have a tax bill, and their cash flow is going to be negative. So they need to be very well capitalized. That said, it reminds me a little bit of the high tech industry. Think of things like Amazon that operated at a loss for years and years, and investors don't care because they're growing, they're building market share, brand, revenue. They know eventually the profits will come. And so cannabis CBD is really a lot like that. So if you're going to start a farm or a processing plant, you better have millions of dollars to withstand those tough times. But you can still make a killing even with net income zero or even a tax loss, because companies are valued pretty highly in this space. And you can even go look at a couple of public companies. Tilray is a great example. They're up in Canada right now, and they're starting to do some buy into the US, but they're valued, I think, at $4 or $5 billion, and they have just astronomical losses every quarter. So that's kind of where we are now. There are bills in Congress right this second in the Senate to do what they did for CBD. Literally just take it off Schedule 1 and 280E disappears. And so we'll see
Excellent.
what happens with that.
Very well said. By the way, you can learn more about Andrew Hunzicker, CPA, at dopecfo.com. Yep, it's exactly how you heard. It's dopecfo.com, DOPECFO.com. So Andrew, how'd you come up with that name? Were you the creative one there, or, or was it somebody else?
I think we were playing around with the website and what names were open. I like the name Dope because yes, it does mean weed, but it also means cool, cutting edge. Mm-hmm. And we like to think of everything we teach accountants in our program is pretty cutting edge and fun, work from anywhere, mm-hmm. and providing that value to our clients.
Love it.
A lot of new age ideas, not old school at all on anything we do.
I love it, Andrew. I love it. I think that's fantastic. So, okay. So first thing is understanding that it is a tricky industry, right? That things are still being set, that there's even stuff in the Senate right now that could pass, that could change some things. So that's step one. What would be step two to making sure that you're properly prepared to report well and not be hit with surprises or fees or penalties when it comes to running your cannabis business?
So if you're a business owner, make sure you've got a crack accountant, tax person, hopefully somebody in our program, because you simply can't do this without the correct tools and whatnot. First of all, cannabis isn't just a niche, or CBD hemp. It's many. It's farming, it's chemical processing, it's product manufacture, testing labs, distribution, and retail. Many times within one organization, they'll have all the verticals. And so you got to know how to do cost accounting. You've got to have tools. You've got to deal with state seed to sale compliance requirements. FDA has its own issues. So there's lots and lots of rules and compliance and tools needed. So you want to get up to speed. And this would apply to any industry. Make sure you know the products, et cetera. And I'm talking more to the CPA accountant. If you're a farm owner or a dispensary, you want to make darn sure you're doing your accounting and tax correctly, because the worst thing, and we've seen this happen, is to do it wrong and have the IRS come down and beat you up later. It's going to devalue your company. Most of these companies are looking to do an exit and hit a home run. So you're going to have due diligence teams do things correctly. Yeah, you may have to pay some tax. You're going to, but then you got to do it correctly to add value to your company.
Yeah, hire the brain surgeons, right? Like Andrew's saying, don't go this out alone, right? This is not
Well,
this isn't the standard, duplex or the standard maybe apartment complex that you have that perhaps you can do some of the accounting on your own. Even there, that's complex stuff, right? Making sure you do depreciation schedules properly, make sure you're expensing things properly,
yeah.
and CapEx improvements properly. This is something that is multiple verticals, and you don't want to get caught. Is that a fair summary, Andrew?
Yes, and let's just pick the first vertical in the chain, farming. It's its own it's its own industry with what the heck's the cost of a plant? You've got 10,000 plants in a field. Maybe one plant you just planted the seed in a pot this big, and we've got plants over here that have been 8 months in the ground and are flowering. And so we have to go through and have a way to evaluate work in process. For plants are work in process. And how do we go through and know the stage for each different strain, where they are in the cycle? And then how do we allocate costs in using equivalent units and pounds? And what tools are we using to do that so we can cost account? And I know cost accounting is the evil word a lot of CPAs hate. And I tell it to bookkeepers like this who don't understand it. You go to pay rent and you book rent expense, $1,000 into your QuickBooks or whatever. To do our cost accounting, we got to come back a month in and say, wait a minute, part of rent belongs in work in process, part of rent belongs in finished goods, part of rent belongs in cost of goods sold, and part of rent stays in rent. And we have to have tools and methods to do that every month. The simple fact is 9 out of 10 farms aren't doing it at all. I love to ask the farmer how much it costs to grow a pound of weed, and they'll often shoot out an answer, and you can't know the answer to that without cost accounting. I've never talked to a farmer that had any idea what cost accounting even was, much less be doing it correctly.
Yeah, this is again another reason why you want to get with Andrew and or one of the CPAs that he's coaching, and I think that's pretty cool that you've gone and you're making an impact on a bigger way, not just everything in house. You're going and you're expanding that. So what's the vision for that, and how's it going?
It's going very well at this point. We have over 800 firms in our program in all 50 states, CPAs, really all skill sets. We even have attorneys, we have bookkeepers, CFOs, enrolled agents. So pretty much the whole gamut. People are sharing work with each other and landing clients. A big part of this niche, well, we get to experience a birth of a massive industry, which in my book, that's a once in a lifetime for any of us in our career. Maybe you'll see two, but probably not more than one or two. Coupled with that are the high revenues of these organizations. So a typical mom and pop can easily pay, 6-figure fees, 150, 200, 250 fees to a firm. So we have many firms in our program, one or two clients, and they can make 400 or 500 grand a year with two clients instead of the old model having 10, 15 clients.
Wonderful. I love that. Absolutely love that. I love the service. I love the collaboration. I love the sharing of ideas to service the industry that's like the wild, wild west to a lot of people, right? But it's becoming obviously more and more mainstream. So fantastic. Love that. Love that. Love that. So now let's shift a little bit to the capital gains tax deferral side of things, right? So before the cannabis industry, or even during the cannabis industry, we're seeing lots of very high multiples, right? People selling,
Yes.
very low basis, huge gains. Capital gains tax depreciation recapture can be somewhere between 30 and 50%. If Biden's proposal is passed, the federal will go from 20 to, potentially as high as about 40%, making it 50 to 70%. So a lot of challenges that we're looking at. But I wonder for you, Andrew, and for your clients over the years, what's been the biggest frustration when it comes to capital gains tax deferral and or even the 1031 exchange?
So luckily, well, a couple of things. Since this industry is so new, there are a lot of exits, and so yeah, that needs to be on people's mind. And we talk about 1202, and if you're a small business, can you defer that under? If you're a C corp, I know a lot of other people's strategy are they're kind of waiting out 280E because 280E says no deductions or credits. And so that could include any kind of strategies like 1031. So there's many strategies around that. One is real estate and equipment is huge in cannabis companies. So you can usually segregate that out into a separate non-cannabis entity. And so we like to see that first and foremost. So if you were going to do an exit, you could structure potentially selling the real estate separately, and or potentially being creative with your allocation of the price. Same with equipment to do some of that capital gain deferral, and then you could use the 1031, et cetera. And or you could wait out 280E as well. If cannabis comes off Schedule 1, that could be another impact. And maybe you could tell me if those proposals do pass, and I'm wondering about it now, they're arguing so much. Do those go back to January 1, or are we looking forward into 2022?
It's a great question. So I've heard both sides of this, right? Biden is proposing to be retroactive on some of these things. Do we think the Biden administration, do we think that they'll actually do that? I mean, let's hope and pray not, because there's a lot of people making big decisions, and there's a lot of ramifications of that. Do we think that over on the first of the year it'll be official, right? Potentially. I mean, these are all just hypotheticals, but still, bottom line is taxes are going up in a big way right now with the current administration. So I want to take one step further on the 1031 though. A lot of my clients, they're like, great, 1031 is great if I can find a deal that makes sense, Andrew, right? If I have the time and I want to be in the real estate industry. But the 1031 doesn't work for business sales. It doesn't work for cryptocurrency. It doesn't work for public or private stock. It doesn't work for artwork and collectibles, right? It only works for investment real estate, right? And it's been reduced to that. And so we offer a thing called a Deferred Sales Trust. It's an installment sale. It's a manufactured installment sale. Been around for 25 years, thousands of closes, billions under management. I'm not sure if you heard of it or not, but I'm just more so curious on when somebody approaches you or a client, or you see something, what are some of the main questions as your CPA mind? What are you asking to make sure that A, it's legal, B, you can get behind it, and C, it's a good fit for your client?
So as with the CPA hat, we're making darn sure there's so many companies even that have been in the illegal markets for years and years that are trying to switch into the legal markets, or we make sure of that first and foremost, and we're putting into place lots of internal controls and corporate governance. And then even just sharing that knowledge, like we talk about our community, we talk about everything from tax strategies to software to insurance, where they can get a bank account, all kinds of things. And so like even like this, so you brought up this deferred tax sales
Deferred
strategy.
Sales Trust, yeah. Mm-hmm.
So I'm going to say right off, I have not used that. I have been a part of 1031s before, but I would love to learn about that. I think that might be an idea that could be applicable to cannabis. And as I meet someone like you and a new idea, I'm always evaluating, okay, would this apply? And then it might be a source of, I can be sending you leads of so-and-so's thinking about doing an exit. Because now as we have deeper network into all these cannabis companies, if you go out 1, 2, 3 years, we are going to have tons of M&A and exits. And layered against this new likely higher taxes on everything from gifts and trust to sales, there's going to be a lot of tax planning help needed for these clients.
Yeah, and it's exactly right. And this is why we're here, right? And my story goes back to the '08 crash when clients had overpaid via the 1031 exchange in investment real estate. I was working at Marcus and Millichap, helping people buy and sell multifamily properties. And they knew they were overpaying in 04, 05, 06, 07, but they feel like they had no other, solution except to either pay the tax or to just buy the property. And fast forward, some lost everything, some lost half, some had to dig their way out of that for a while. And so we learned about it. And, like most people, we thought it was too good to be true, or, why hadn't we heard about it? Why hadn't my CPA tell me about it? But the more we learned and the more we saw the deals close and the private letter rulings and the IRS audits that were no change, perfect audits, and then the audit defense for the tax returns that stand behind it. And the more I got to know the structure and understand it, the more it's like, wow, this is the Netflix to the old Blockbuster way of doing things. And it works for cryptocurrency. We just closed a $5 million deal a week ago Saturday on that. Business sales. It works for, it can save a failed 1031. It works for primary homes, and it works for the cannabis industry. There's been cannabis DST deals as well. And so these are all things that as you're talking about, networking and sharing the information, it can empower people. And but is there, if someone's in your shoes, or even you, right, you're just hearing about it for the first time, what are the one or two questions that you're asking to find out if it passes, like, say the sniff test on the beginning, right? Because it's never been on the dirty dozen list. It's never been on the IRS watch list. What are some of the things that you might ask if a listener's hearing about this for the first time?
About this strategy, or
about any kind of tax deferral strategy, right? It could be anything that's kind of new. Like what would be the the thoughts that you would.
So what you already mentioned, I would want to see, is this tested? Have the courts, are there rulings on it?
Mm-hmm.
Are people actually surviving audits? That would be huge. That'd probably be the biggest. And then if it is working, I'm going to be open to listening to any kind of tax strategies, and crypto is a big part of cannabis as well. Mm-hmm. So anything on those areas that look like they're legitimate and have been tested, I would love to hear about them.
Exactly. Yep. Well, appreciate you role playing with that a little bit there, because I know it's definitely on a lot of people's minds. So that being said, we're running out of time. Are you ready for the lightning round?
Sure.
Hopefully. Right, here we go. Knowing what you know now, if you could go back to your 25-year-old self, what's the one golden nugget that you would make sure to tell yourself to do?
Actually focus on college the first time around, so I don't have to go second time to get my accounting degree. I took finance, first degree that I never used, and I didn't do accounting because I was like, oh, that's too hard. It'll take too much time.
Mm-hmm. I hear you. Yep, very good. Second question: what's the number one book you've recommended or gifted the most in the past year?
That is easy. The Black Swan, because I actually just posted today about that book on Instagram, and I love it. It's got some absolute gems in there for running a business of any kind.
Excellent. Third question: what are you most curious about right now?
I would probably have to say again, the thing that's on my mind constantly is I'm following the courts, because we've of course got COVID on our mind. I want to get past. I'm sick of dealing with that. Actually, I'm trying to put that out of my mind. But I look at what's going on in Congress like never before. We've got this infrastructure bill and tax bills, cannabis bills, all these different bills. And we also know none of these people in Congress can get along with each other. And so just wondering, how are the chips going to fall? Because we're all trying to help our clients. Mm-hmm. And I'm just curious to see, are we going to actually get something changed, or are we going to stay where we are?
Absolutely. Which leads, actually, I want to touch on two other things. The estate tax and the stepped up basis, right? Besides the capital gains tax, to me, that's big. And the 1031 being limited, that's big. But really the big elephant, even bigger than this, is the elimination of the stepped up basis, right? Yeah. This to me is with the demographics of the biggest wealth transfer by the baby boomers in the history of the planet. More wealth than ever perhaps is transferring from baby boomers to millennials. You look at this and you go, oh my gosh, if they take away the stepped up basis, that to me is the biggest thing. So I'm praying that doesn't happen, but could you just talk about how big that might be if they actually get that passed?
It's huge. And when I go back 20 years, when I took my first CFO job into this multi-generational oil and gas company, first thing I did, I helped them. I was like, how can we get more money out of this 90-year-old grandma into the grandkids' hands to get rid? And that's back then when the gifting and estate laws were slowly creeping up. So today, I would be thinking any kind of strategy to move assets out of your estate before that happens, move them down to those generations in some kind of trust or whatever, so that you can still hopefully keep effective control in some way, but get it out of your estate if at all possible. Because I think once we go down this road, it's going to be very hard to go back the other way.
Yeah, I 100% agree. And by the way, we do have a solution for that. It's called the DST Plus. We just did a deal in Colorado for a $25 million client. They sold a $5 million asset, and their challenge is all 25, Andrew, was inside of their taxable estate, mostly real estate. And so they sold the multifamily property, about 50 units, and they were able to move it outside of their taxable estate in one transaction without giving it away to charity, without having to do any gifting, without having to buy life insurance, using what's called the DST Plus, which is pretty remarkable. And And it's big because it's 40% savings for them, right? Because it's 22
Yeah.
million married, 12 million single approximately. But those exemptions are set to be cut in half, and Biden's in 2025, and Biden's even proposing to cut that maybe to 7 and 3.5 single. So it's staggering to think about. I like to say
Yeah.
it's no longer just about cash flow, Andrew. It's about tax flow, and it's always been that way. It's always been both, but now more than ever, with where taxes are going, it's managing and using the legal laws on the books and legal tax codes to defer tax, and to create and preserve more wealth for families. And so, that being said, any last thoughts on estate tax and
Well,
the stepped up basis?
I think that is awesome what you're doing. And so my guidance to other CPAs and accountants out there, I used to tell people for years, oh, I don't do tax returns. I'm on the audit side. I don't do tax planning. We should all be doing tax planning for our clients. We should pay attention to what's going on in the government, the new laws. We can all do it. You don't have to know how to fill out a tax return, but you can find, and you hear about a strategy like you're talking about. Yes, bring it to your clients. I can't even tell you how happy they will be. You bring them a strategy that you may know, you may be a bookkeeper and don't have your CPA, but you heard this and you found this out, you heard this podcast, you take it to your client and you save them $5 million. I can darn sure they're going to be happy with you.
Absolutely.
They're
It's
not
the
gonna say
value
that.
add, right? Right.
Yeah.
And it's the value add like no other. No, we couldn't agree with you more. I appreciate that. By the way, you can learn more about the Deferred Sales Trust at capitalgainstaxsolutions.com. We've closed 7 of these deals in the past 40 days. We'll close another 7. The business just keeps building and building and building because the need is there. So you can go to capitalgainstaxsolutions.com. You got to pre-plan everyone though. It's not something you can do post close. So we've got a pre-plan. We work on a no cost conditional basis. We only get paid if we deliver on the strategy. So again, go to capitalgainstaxsolutions.com and please get with us early so that we can help you out. That being said, our last question, Andrew, is this. After helping so many people with their taxes, working in the big four, getting a perfect score in the CPA exam, and really breaking and being a pioneer for breaking in and being a pioneer for the cannabis industry, how do you stay centered in your values, and how do you stay encouraged to charge forward to reach new goals?
Well, I basically center my life around 3 things: my family, my wife and 3 boys, and my dog Ozzy, and my health and well-being, and then my work, occupation. And so the way I look at it, you for a lot of us, we want to work into I'm almost 60, but I want to keep on working because you got to have something to do. You can't just go out to pasture. So you need to have a business that engages your mind, and it's fun and interesting. It's exciting. And so that's kind of how I stay centered. And I just have fun. And even as you give me that last question, I'd love to have you on my podcast as well and flip it around. I think my podcast that goes out to cannabis owners and cannabis accountants, they would love to hear about these strategies.
Love to. Maybe my honor to be on your show. Andrew, I want to thank you for being on the show. For our listeners who want to get in touch with you, would you mind, one last time, what's the best place for them to find you?
2 places: dopecfo.com, dopecfo.com, or follow me on Instagram at dopecfo1. Just put a 1 behind it and you'll find me. And I put all kinds of content out there daily.
Amazing. Andrew Hunzicker, CPA out of Bend, Oregon. By the way, if you've never been to Bend, Oregon, you need to get there. It's one of the most beautiful places in the U.S. I feel like it's a hidden gem.
Yes.
And get to Bend, Oregon. Andrew, I want to encourage you to keep using the gifts of persistence and keep throwing, don't get thrown out of school anymore, but keep throwing your gifts and talents into things that you love, and you can make a difference in this world. I so appreciate your time, sharing your expertise. I know I'm smarter and better for it, and so are my listeners. And that wraps up another show. I want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options when it comes to selling highly appreciated assets, cannabis, cryptocurrency, businesses, stock, saving a failed 1031 exchange. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust is the best way for you to defer your tax, grow your wealth, and we want to help you. We want you to go to capitalgainstaxsolutions.com to learn more about that. We also want you to rate, review, subscribe. We're also streaming on Expert CRE Secrets. If you're an M&A advisor, business broker, commercial real estate broker, go to Expert CRE Secrets and see how we're changing the industry there as well. Thanks everyone for listening. We so appreciate you out there.